All right, guys, welcome back for another video. So you've heard it here first. The Bitcoin bottom is in. It bottomed out at 1811. Well, not really. I mean, there's no way to predict a bottom in the market. You know, setting out to try to do that is really over the long term going to only hurt you, right? You don't want to pick bottoms. You don't want to pick tops. That's really how a lot of people end up blowing their account. So this is for entertainment purposes only. But there are things happening in the chart that make me think that this is a very, if bottom may not be the right word, but a very, very significant support. You may also notice that that sentiment is extremely bearish right now, which is good, right? Anytime you're at like an extreme level of support, and sentiment is extremely bearish. That's the perfect combination. So let's dive right into all the different elements making this a significant support. So we're coming down into the all-time high from 2017. Broadly speaking, of course, it's a little bit higher than current price action. It's not an exact level, but price comes in there and then capitulates down. I don't have the chart up, but if you were to pull up the chart, you would see that there are more realized losses taken in Bitcoin during this period right here than any other point in Bitcoin's history. Now, you may have, if you watch my other videos, you may have heard me mention this over and over and over again. So sorry for repeating the same thing over and over, but I do think it is important. And it really is the basis for why I think this is a significant area of support, just because anytime you get like a significant level like this, right, you're coming into an extremely historic level on the greatest capitulation in Bitcoin's history ever. So that's unique, right? It's very unique. Um, so then I just want to go down. So we've got that level marked off, and then I want to talk about the RSI in combination with bullish divergence. So we come down to that area of interest, and then we're building bullish divergence off that level, and then rallies off that level right here, then comes back down, and we start coming down to that level again, this 18,000 level roughly right here. And then you get a low here and then a lower low, but a higher low on the RSI. So you can see this is always like a great, very, very classic trading example right here. So we can pull, this is the all-time high from 2017. We can pull that off the chart. Mark this off right here. Anytime you have a swing low formation in the RSI like this, with a drive surrounded by two higher lows right here, but then you get the multiple drives lower on the RSI. That's your higher low. Once it starts taking out the highs, then it'll typically gap up, and that's what it did right here, gapping up for this level right there. So we now again, then we come down below this level that's set in that RSI divergence, and we're setting another divergence right here. This low is higher relative to this low, and then also right here, this low relative to this low. So and then if we go down to the 4-hour chart, you can see that vividly as well, right? So this 4-hour close. So you're forming divergences across the entire spectrum, right? You're forming them on the weekly chart, down to the daily chart, and it's like you can see how price is getting pushed into this narrow range, right? Where clearly people are capitulating or being stopped out, or liquidity is being ran below this 18,500 level. And another way to look at that is to look at the volume. But really, so we got divergence being pushed into this level, right? And you get divergences across every major significant time frame, all the way down to a 4-hour. Let's see if there's an hourly. Not really, not on the hourly chart. Go to a 15-minute. Yeah, nothing really on a 15-minute. I just want to go back to the 12-hour real quick and really just point out and really just make the case for why this area is significant, why I'm making this video now that's saying that the bottom is in the market. and why I'm confident enough to do that is because of the volume coming in here. So, Coinbase, I typically like to follow the Coinbase chart because I'm of the opinion that the spot market is more important than the derivatives market. I really care what spot is doing. Spot really drives the market, not the derivatives market. So you'll realize that anytime you see the like a big bull rally in Bitcoin, typically it'll be led by spot, and in a lot of circumstances, spot will trade at a premium over the perpetuals, and you can actually have a negative funding rate as Bitcoin is getting parabolic in its price advance, which doesn't make sense to a lot of people, but it makes sense if you think about it from the perspective of spot leading the market. Anyway, it's a long way of saying why I pay attention to Coinbase, because Coinbase is primarily a spot market. They don't really offer derivatives, and if they do, they have a very minor scale derivatives operation or leverage operation relative to their spot capabilities. So in my mind, Coinbase is really the chart to look for, especially if you're looking at volume. Um, so anyway, now this 12-hour candle that we just got here that just confirmed a few minutes ago, that area is very, very significant because you're getting a spike in the 12-hour volume that is far more significant than any period in the last few months of history. You have to go back to the capitulation. Now remember, we capitulated down into the all-time high from 2017, and we did that on heavy, heavy volume. So remember this area here. So in this area, more Bitcoin realized losses were taken during this descent than any other period in Bitcoin's history. That's pretty amazing. It's the largest capitulation ever. So that should put this volume spike into proper context, right? And give it some perspective. This is a very, 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 very high volume right here. This is the largest capitulation ever in Bitcoin's history. And today's 12-hour candle is very close to the volume areas coming in from those 12-hour candles during those capitulations. So the amount of volume that is coming in here is extremely significant. Extremely, extremely significant. Most of it was coming in during FOMC, but you had this washout basically where you anytime you see this distinction in the market, right? You have the FOMC data release. We can mark it off on the hourly chart right here. Let's see. Yeah, right here. So you get FOMC, and then price runs up. So first it consolidates in this level right here, and then you get the FOMC data release right here. Volume comes in, pushes above these highs, takes these stops out right here, pushes down back below these lows right here, takes these stops out right here, runs liquidity there, pushes back up, then makes another run for these lows right here. And you can see how a lot of the volume is, being, to the downside, actually running for liquidity below the lows right here. So anytime you see this pattern on a chart, what's happening here is, volatility is expanding, right? Volatility is expanding again off this historical support level that we identified as being very significant. Bullish divergences coming in there, and this being a huge area of support where people are getting extremely, extremely bearish. And then volatility starts to expand. It expanded to the downside, but support is still holding, right? It's running liquidity below the lows at support, but it's not, it's not breaking support. The floor is not dropping out. These sell orders are just getting absorbed. So really, a lot of these, what you would want to see happen is, we kind of talked about how price is sort of getting pushed into a corner over here and divergences are forming, and this is kind of not really a Wyckoff accumulation, but there's clear accumulation happening at this level right here, and these lows, particularly at this level over here, as price dips lower and lower, and it's getting squeezed into this wedge. Now, what would you need to confirm it? That these multiple drives of bullish divergence? Well, you would want to see price reclaim this high or the intermediate high. So you see that better on a 4 hour. Pull everything off the chart. So yeah, you would want to see price reclaim this, basically get back above 20,000. Um, if you're a conservative trader, I mean, there's no harm in being conservative in that way. Actually, I think it's really the most prudent choice to make, because ultimately, if price reclaims the 20,000 level, and this area is a very significant bottom, price is going to go way higher than 20,000. I mean, price is going to mount a rally, and when Bitcoin bottoms out at these areas, we'll just put things in perspective a little bit. See if we can put we got the 200 moving average. So right now, just to frame this in the context of the market cycle, you know, anytime you're at a 200 moving average, price can, you know, double or triple very quickly, right? Double after this. Right here, it hit the 200 moving average and basically went from 3,000 to 13,000. So 4x very quickly. So yeah, I mean, like if you look at this area right here, coming down to 200 moving average right here, hits that 200 moving average on the weekly, and then rallies up into a 618 retracement perfectly, beautifully, rallies back into it. Then you get the Bitcoin halving, rally takes off. So if we were to apply the same logic here, now I know we're a little bit below the 200 moving average on the weekly, but still it's the same. It's the same basic area in the market cycle, right? It's okay that we're a little bit below it. For all intents and purposes, we're at that area. So now if we just assume that Bitcoin was going to bottom out here, yeah, I mean the 618 retracement would be basically 50,000 Bitcoin. So again, that's way higher than people expect, but historically that's kind of characteristic of what you see Bitcoin do when it bottoms out. Again, there's no guarantee that Bitcoin has to reach for a 618 or even top out at 618. It could theoretically just start to rally and then not stop until it reclaims the all-time high and then continues higher. That's really the scenario I think that would catch everybody off guard, and actually a very realistic scenario is if Bitcoin just keeps running and keeps pumping without forming without cooling off, without selling off, without forming a higher low, just like pumping up. I think that would be the most, I hate to say it, but the most max pain scenario would be just, max upside. Now, I don't think it's the best risk reward setup, right? I don't think it's the most likely scenario. So don't get me wrong. I definitely don't think that Bitcoin will, just reach for the sky and keep going. Certainly not the most likely scenario, but it is a realistic scenario. And, considering that we have declined 80% from the all-time high, people's perception about what is even possible is very skewed in the favor of that not being considered. So I think with that in mind, I think it is important to consider, and it is something to keep on your radar. Obviously, you don't want to frame everything for the big home run trade, but if it does happen, maybe be in a position where you can take advantage of it. Anyway, I hope you guys like this video. If you guys like this type of content, please just make sure to leave a like on the video, subscribe to the channel. I'll catch you guys in the next upload.